Good evening, ladies and gentlemen. It is Wednesday, 9th of June, 2021. Welcome to episode 15 of Hindsight, where we learn to be a better trader. I take a look at the stocks that I traded today, as well as what could have been done better and any opportunities that were missed. Now, I've been away for a couple of days. I've been out and about in the mountains, taking a bit of a holiday. So I've heard the liquidity has been garbage, the stock trading, the choices have been garbage for the last couple of days, and that's typical end of financial year June garbage. However, it looks like today was really bloody good. Everything was quite tradable. Like, the liquidity was there, the stock choices were there. We've traded 5 different stock tickers. So let's get right into it. And keep in mind, guys, I'm still trading in small size. I've scaled down heavily because it's still June, end of financial year. But I'm really happy with the gains that were made today. So let's dive right into it. We've got BIR here. Here's a horizontal at 3.1. We've got a horizontal here at 3.6. And another horizontal here at 4.3, and I'll show you guys why these levels were relevant. So if we zoom into the intraday view, this is where the stock started trading at 10 a.m. Didn't take anything leading up to it, wanted to see the breakout, got the breakout, and then a pullback. Now, keep in mind the volumes were reduced on the pullback, so scaled into the position quite nicely from 3.3 to 3.2, and I think some at 3.4 as well. So happy to see the break on good volumes, and nobody was hitting the bid whatsoever. Like, there was little volumes coming in. So the plan was really to see what happens at this 3.6 level, because it came so close before, so it didn't quite get rejected off it, came very close. And I was just looking for another leg up because it is morning volatility, morning volumes are going to be high. So did end up taking it at 4.2, didn't want to wait for 4.3 because I like getting that one tick below resistance, and I can't remember the book, but I think there might have been a wall there based on the volumes as well. So I guess you could call that a bit of volume exhaustion. And that was really it. You know, there wasn't much else for BIR. I'm sure there was a scalp here or there. But it spooked me to see this monstrous sell here and this one here. And, you know, these were basically market sells. They weren't pretty at all to see these. So I was kind of not interested in the stock anymore after that. I was like, right, I don't want to be in a stock where people are just market selling 1 million shares on a bloody 3-cent stock. So happy to take what I got there. Then moved over to ZEU. Now this one was interesting. I had it open. I wasn't too interested in this trade once the match became a pretty decent negative for 6 cents, which was the match open. I don't recall how much flowed through at 5.9, maybe just a few dollars. But really it was all about that 6-cent wall. I had my ticket ready. And lo and behold, volumes came in and wiped the 6-cent level. So I joined that momentum, and then I kind of just bailed out a little too early. I got out at 6.3 for just under half my position, and then scaled out 6.5 and 6.6. I can't remember the reason exactly. I think it was 6.3 was reload selling, and then eventually, 6.3... the bids took over effectively, and the buy pressure. Quite a lot in terms of percentage gain potential that I missed out on. So obviously from 6 cents to 7.2, 7.3, maybe 7.1. Look, taking just under 10%, I'm still happy with it in terms of percentage gain. Like, that's always a good, healthy amount to take. So really happy with that. But the opportunity is, you can see where the opportunity is, right? I do have a habit with microcaps particularly, is getting spooked a little bit too early on match trades, particularly because I'm in the environment of end of financial year. It's June. The trading hasn't been crash hot lately, so I'm kind of taking it where I can, and maybe that needs to change in the coming days. We'll see what the market conditions are like following on for the rest of the week. We have COD here. Market's hot for copper. We can see there's quite a bit of a gap up. It's a pretty liquid stock if I bring up the daily chart, if I recall. Yeah, not that interesting of a stock historically. So big gap up, well over the 51-cent resistance level. So back to intraday on the 1-minute chart. It was a copper hit. So this is the announcement. I can't visually see where the copper hit is in this, but evidently it's there, and it looks like a lot. But scrolling down, you can see that, this particular drill, this DD21AB0018, which is this one here, it's 800 meters deep. At least that's where I believe that intersect is. That is from, 837.6 meters, right? That's fucking deep. So I didn't think the market would really care about this announcement, but who knows, maybe this is like pure copper or something. Like, I can't visually see where the copper hit is because the coloring is so similar. Maybe I'll have to go back and have a look. Yeah, other copper hits and drill results and cores, because obviously this hasn't been graded yet, but it looks pretty significant to some people, I guess, and that explains why this stock shot up. So we have a stock that if I recall off the top of my head, this had well under 100 million shares. I think it was like 70 million shares. So it moved up quite nicely. I think it ended at around 100 mil market cap, maybe a little bit more. And I just kept this one open, and I was curious to see what would happen, because obviously chalcopyrite, copper, these are just words that the market is interested in, right? Copper is hot. Copper is fucking hot. So what we have here is a channel, a descending sort of trend line here. Basically, it was looking at what would happen at VWAP, retest here on this trend line, and that was like a perfect textbook entry for me. I couldn't have asked for any better. And you know, the risk was really low here. Like, it would have been under this sort of level here. So really clearly defined risk. In terms of reward, I really was looking at scaling out at this opening level here, you know, this horizontal. I talk about the strength of open horizontal, so the opening range here. So we got, you know, 80 cents and 75 cents. So scale out, see what would happen. Take the rest out at 78.5. I didn't manage to hold it. Sorry, I believe that was 79, not 78.5. But I want to get out before that 80. Bit of volatility here, and I spotted this trend line. It's like a shitty little trend line, right? Like these two little points here. The selling seems to have ceased. Bought in at 83, and it was just drip feeding to the upside. Got out at about 85.5, 86, and really it was just a low volume scalp there. I wasn't too interested in like a bigger swing or anything like that, but I was interested in the price action, and there was a couple of targets that I was really chasing. I did mention on Twitter that this momentum, right, this entire uptrend that you see isn't really sustainable on this kind of a sharp angle. Right, I know there's no real technical term for, you know, how sharp an angle is or a trend line is or anything like that, but just in general, especially because it's June and stuff like that, I wasn't interested in, you know, I wasn't expecting a rally like that, and then, you know, that's too significant of an incline, too significant of a rise, especially factoring in the massive gap that we have from, what was it, below 30 cents to 80 cents, I think it was. Can't remember what the opening, yeah, 36 cents to 80 cents. It's a huge gain on open, so can't expect a massive hyperbolic trend like that to be sustained. So it took a bit of a scalp there. I was looking for one of two things: horizontal for the retest or VWAP. I was looking for one of those two things. I didn't get it. Right? I don't think in hindsight that there was any other real opportunity for me to get in on this trade. I did see these volumes were kind of meh as it was rising. I wasn't too interested in it. I was interested on this sort of break of the horizontal, right? It sort of dabbled. Again, not really interested in the volumes here. And the price action, there was a bit of a dip as well. And the recovery, or rather the lack of selling that followed through, was, you know, enough to convince me to buy into this. Now, keep in mind, this stock did rally, was at around 88 cents. And once it hits that level, to me, by default, I consider that a magnet to the dollar, right? 100-cent target from 88 to 100. It's not that hard to ask for. It's just like the 8.8 cent stocks rallying to 10 cents. It's just a magnet. It's not a guarantee, but it's very, very likely that it gets there. So I did buy on that sort of horizontal break, and there was an opportunity to add on. Didn't manage to. I was looking for the break here. I bought in anticipation. Saw it was kind of a bit flimsy. It was going sideways. I don't like it when it's at its highs going sideways like that, especially near a resistance level. It just took it out, saw it collapse, and I let it go. It was a while before I made my next trade. I was looking for something clean, something clear and obvious. Again, VWAP is always going to be a level that I'm going to pay attention to. You know, if it slowly grinds down to VWAP, yeah, I'll take it. If there's a sharp bounce to VWAP, I'm definitely taking it. So I'm pretty much just saying I'll always take VWAP at this point. But yeah, so what we have is a trend line that was broken. Again, another catch, another break, test the horizontal, catch it. That's not too different to what I did here. It's the exact same concept. It's a break into a major resistance, come back down to retest. And this is the same thing for me. I know this trend line might look shitty to you, but at the time it looked perfectly sound. And I still sort of stand by that it looks sound. This is, a low share and issue stock. The volumes have tapered off. So yeah, the chart's not going to look fantastic, but really happy with this entry. I think it was 88.5, 89 cents. And then added on in anticipation that this is just going to rally to the upside as well, because bouncing like this so strongly, the sellers didn't really appear. And this was, confirmation. As long as I didn't see like sellers, pile in with big volumes, I was happy enough to add on to the position and just scale out just under $1. Again, dollar magnet, just like my 10 cents, right? I don't hold my 10 cents to 11 or 10.5 cents or anything like that. Same with my dollar targets. I sell that before that dollar because obviously there's major resistance there. And of course we see it does end up hitting $1 and then getting rejected. But guys, from $1 to 96 cents, that is sweet fuck all selling, right? That is 3 cents from something that's rallied on the lows of 65 to $1. Right, there's about 35 cents, and there was only a 3 cent reject off a major resistance, major psychological resistance of $1. Yeah, this was fucking interesting. So, waited for this to break out again, break through the dollar, and then of course, buy in on the dip, buy in on the retest. Clear risk to reward. For this, I was willing to give it a bit of room. 98 cents was my stop loss for this one, so plenty of room for stop. Add on, scale in, and then sell out at. Honestly, my target here was a bit random here. I was just kind of watching the book, and I was not too happy seeing that follow through as well, that kind of selling. And I also wasn't happy to see this kind of volumes as it was trickling to the upside. But of course, my emotions got the better of me on this one, and yeah, ended up getting in. Saw the broker horizontal, got in late. At 112, and then of course the opportunity was there to scalp it. Didn't take it. High volumes came in, crushed it. It was a terrible entry. Really should have been the long position should have been a wait for the retest, like I've been doing. Buy in at the retest. Didn't do it. Wanted to follow the momentum. Was interested because of the volumes. Right, the volumes were significant leading into the afternoon, and what was fascinating, what I didn't expect, was this price action here. Right, there was a big shoot up on this candle here, from 105 to 17, and then from there it shot up again to 110. Bought the pullback and closed it out into auction. The vast majority of the position into auction here. So you can't see the candle where it closed, but it did close at 119 today at 4:10 p.m. So really, really happy with that as well. So saw the strength right into close. When's the last 12 minutes or so and there's volume and then it just starts trending to the upside? It's a beautiful thing to see. Now, I didn't hold overnight because I have a terrible, terrible track record of holding a day trade overnight. It's just, it doesn't end well. It never ends well for me. So small parcel. Technically it looks perfect. It closed at its absolute highs. So that is as good of a candle as you can ask for holding overnight, I guess. CDD, this was my pump consolidate setup that I spotted. Nice volumes, pump, consolidate, got a position, it failed. Now you might be wondering, well, why did I not wait for the fail? Why, the retest here? The reality is this should not be going, and it's a little bit deceptive because it's 2 o'clock here, and this horizontal has been going on since 10:45. So it's been going on all fucking day. That shouldn't happen on pump, consolidate, pump. It really should move a lot sooner. This shouldn't be consolidating for like 4 hours or whatever it was. It should break out once volumes came in. I think it was these volumes I was really interested in. There was like a spike, and then it just failed. Volumes came in for sell, and I was like, right, I've got no choice. I've got to bail out. So that was unfortunate. Pump, consolidate, pump setup just didn't work out for me. And then 8VI. This one was just fucking stupid. Shouldn't have bought into it. Shouldn't have touched it. Gappy horse shit. $3.70, $3.80. That was like always a 10 pip spread. So you could basically trade it like it was 37 cents, 38 cents, 39 cents. That's kind of how I decided to trade it. Got in at like 38.5, I think it might have been. Closed out at 37. There was a bit of fuckery here. And, this little grind, you know, this fall back down to VWAP. It didn't really get to VWAP, and then just bleh. Yeah, it was a terrible trade. You know, there was no real good decision making behind my initial entry at 3.8. I think I saw some volumes come in, and I was interested in that, but technically it was just a poor decision. There was no real justification there. So, yeah, look, I'm not always perfect, so fuck you guys. That's pretty much it. If you learned a thing or two, then hey, hit that sub button. Otherwise, I'll catch you next time.